We got a 3-day rally in the S&P 500. You have the S&P 500 up today, 0.5%. Same with the Nasdaq. Small cap saw the majority of the gains, up over 1.1%. But you also have rising yields over the past couple months. Rising yields that are starting to accelerate even more to the upside as we burden ourselves with more and more debt as a country here in the United States. Plus, on top of that, you have war breaking out in the Middle East between Israel and Hamas. So with oil rising, can this market continue to keep this 3-day rally? Can it go back up to the yearly highs? What I'm going to do, I'm going to go over in good detail the S&P 500, the Russell 2000, and the Nasdaq 100. But first, make sure you like and subscribe to this channel so you get notified when I do these videos and reels. I do a whole bunch of different stuff, so it's really worth checking out. So first off, with the S&P 500, what we want to look at here is this rising trend line off of the October lows. That ended up holding to perfection. You also had the 200-day moving average. That's this white line right here. And that white line also held up really well. So then the bigger question became, how are we going to respond to this layer of resistance here that goes all the way back to late 2021. That's what created this head and shoulders pattern that we broke down on in 2022. This was your left shoulder right here. And then you had the head right there. And then you had the right shoulder. And then you had the breakdown. So now this resistance has seen multiple rejections in the past, most namely the one from the August rally of last year. And then we broke through it. We came back down. We bounced off of it. We came back down, broke below it. And now we're rallying back above it. So this resistance level is starting to lose a little bit of its clout here. It's not as strong as it once was. And the reason why I say that is because price has gone below it, gone back above it, and it's not really giving it much fanfare here over the past month. So with that break today, yes, we closed just below it yesterday, but we gapped above and rallied above it today. So now the next layer of resistance becomes this declining trend line off of the July highs. So can it get back up to this July highs? And if it can break through that, then you have a legit chance at taking out the highs for the year. So that's a big move. That would require a pretty much complete narrative change, because in the market right now, there's a lot of fear surrounding the dip in bonds, the rise in the yields. You have war in the Middle East. There's a lot of problems that are hitting the stock market right now that we have to be considerate of. There's a lot more headline risk right now than what we saw in June and July. A lot more. So what we're getting right here, you have this big gap here on the SPY. When I extend this thing out, you can see we're starting to try to fill that gap. And why that's important is because gaps often act as suctions for price. So it'll suck it right back up to where it fills this gap. Charts do not like to have open gaps on the chart. And most of the time they fill them in the same trading day. But when they don't, they do tend to come back and fill them over time, about 90% of the time. So if we get back up to that level, I think there's a good chance that we could see 447. We're coming out of oversold conditions. The fast stochastics, it'll say that we're starting to get into near overbought territory. But if you look at some of the other indicators, like for instance, one that I really like is the T2108. This one still has only 28% of stocks trading above their 40-day moving average. So more of your longer term aren't showing necessarily an overbought market. Your short-term ones will show it even after something like a 3-day rally there. So 3 days to the upside. Wouldn't surprise me if we saw a little bit of consolidation here once we fill this gap. And then perhaps we'll get that rally back up to this 446, 447 level. Now, what about the Nasdaq? I want to look at a couple of different lines here for you guys, some support and resistance. This is probably the most important part of the Nasdaq right now, is this declining resistance. This one here goes all the way back to the July high, similar to what we were just talking about with the S&P 500. And it's very close to testing it, very close. This rising trend line, though, back off of the January lows, that broke down. So we had a break back below, and then we tested it here yesterday, couldn't quite get through it, but then we, like similar to the S&P 500, we gapped back above it and we rallied the rest of the day. Now that we've broken below it and above it here for a grand total of 2 times, not really thinking this is going to play a huge role going forward, so I think we can get rid of that line. But what I do want to be paying close attention to is this support level underneath, because with it, combined with this yellow line and this white line, you have essentially like a slight narrowing channel, like a little bit of a wedge pattern. And I can't get bullish on the Qs. I think you can play the bounce in Qs, but I wouldn't necessarily be saying, oh man, this market's going to all-time highs again. You can't get bullish about the Qs. You can play the bounce, two different things, but you can't get bullish about the Qs until it really gets back through this resistance. So I don't necessarily want to be adding any more positions to what I already have right now until we can break above this, or above the declining resistance. And if it can't do that, then you have this support level underneath, this support level at 350 currently. If it breaks below that, then we're starting to talk about some much bigger support levels getting retested, maybe at 329 or so. If it can break above this resistance though, then you're talking about retesting the highs on the year. You also have major trend lines, and this is one of the big problems with the Qs right now, is that you don't have a lot of support underneath. And so I still keep watching this rising trend line. This one goes all the way back to 2017. What an interesting chart and long-term investment opportunity, even if you could get a pullback down to this 228, 230 level. That happens, yeah, I'm going to be adding a lot more stuff to the portfolio for sure. This is a weekly chart, by the way. And when you look at the weekly chart, you can notice here that the recent price action even looks like a little bit of a bull flag. So that has some promise there, that this price action here translates more to a bull flag on the weekly chart. Especially with the flight to safety mentality that the Nasdaq has displayed of late, particularly with like Meta, Amazon, Apple, Google, Microsoft, Nvidia. You could see the Qs go and break out of this wedge to the upside and maybe make a run for the all-time highs, considering how big those stocks are and the willingness of the market to constantly flee to them as a flight to safety. But again, if you see, we had the 10-year yield down about 3%. That's got to continue into the days ahead, or this rally is going to fail. The 10-year dropping, and by dropping, let me show you what I'm talking about here. This 10-year yield, hugely important here. So we haven't really gotten a drop until today. That was a big drop that helped a little bit with the market rally. When the bond auction didn't go very well today, that's where you saw that midday sell-off. You also have some heavy resistance overhead. This goes all the way back to 2000. This isn't like something recent. So it's nearing some heavy resistance here. If you look at it from a monthly chart, it's even more clear. It's essentially tested this resistance level and unable to break through it as of yet. So if it breaks above that, and honestly at this point, I'm a bit surprised that we haven't seen anything break in the market, considering how much higher we are than where we were even at March when the regional banks started to break down. It would make sense that we would be breaking down at this point, and we haven't, in terms of seeing an actual breakdown in the economic system. So declines in the 10-year, that's going to be huge going forward. That's what you really want to see for the bulls, for this market to be able to sustain the rally. And then what happens if it pulls back down to the support area around 43.55, or about a 4.355 yield for the 10-year? That's where there's going to be some major support there, and where we could see an eventual bounce. Next, I want you to look at IWM. And again, IWM, the Qs, S&P 500, they're very much influenced right now by the 10-year yield. You have decline of resistance. Now, the good thing is this decline of resistance did actually break today. So Russell 2000 small caps, it's been on a 5-day rally. Really good streak here unfolding, some pretty good volume for the most part as well. You also have some support that it's quickly approaching, and this resistance could play a key role going forward. So if it can get back up to this like 181 level, that would be a huge area for it to be testing. If it can get to that level and break through it, then you do set up the opportunity for a possible run into the mid 190s. But for now, can it sustain this bounce? 10 years is going to play a huge role in that. Also, rise in oil prices will help it tremendously if that continues to happen. Plus, that's going to help a lot of the energy stocks, which are small caps. This 181 level, pay close attention to that level as it gets much closer. If it can't break through it, then you may see the restart in the next leg lower for the Russell 2000.